What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. 2018 marks the 10-year anniversary for one of the biggest debt crises in the history of time when the mortgage market collapsed, which caused a huge financial meltdown all over the world. One of the biggest factors that led to this entire economic crash was people having access to so much debt that they couldn't necessarily afford. Even if you had no income, no job, and no assets, you could still qualify for a ninja loan, which stood for no income, no job, and you want to guess, no assets. All you had to do was go to your bank and say, "Hi, I'm looking to get a $300,000 loan. I make enough money and I pay my things on time. Can I get the $300,000? And usually the banker would say something like, "Okay, let me think about it for a second. Yep, you got approved for $320,000. Oh, $320,000? That sounds great. I'll take it all." Stupid banks. Banks did not have to verify your income, and they didn't really want to, because if they had to verify your credentials, that would mean that it would take more time, and it would mean that some people would get rejected, and banks don't want to reject people, because if you get rejected on your loan, that means you're not going to be borrowing any money, and that means the bank is not going to make any money. And that's why banks were willing to give people loans at 125% LTV, which means if you wanted to buy a home worth $100,000, the bank would be willing to give you sometimes $125,000, meaning they would cover your closing costs and your fees and your down payment, and they would also fund your new TV, because I mean, real estate never goes down in value. Are you crazy? So if you wanted a loan, all you had to do was write down how much money you make and then sign it saying that you're not lying, and then the bank would give you a big check. That was it. They didn't check what you wrote down. They took your word for it. And you already know what resulted. This led to a complete financial meltdown, and it led to people living in tents across the entire country, and it led to the United States having to spend hundreds of billions, or if not trillions, of taxpayer dollars to bail out the big banks and stimulate the economy. After a worldwide crash like that, you'd expect us to learn a thing or two about, easy access to too much debt, right? Let's just say when you have nothing to lose, you can afford to be a little risky, because right now we're seeing something similar in two different places. First is our student loan debt, and I don't really want to get into the value of education or other things like that today. I want to talk about the cost of our student loans. To qualify for a student loan, you essentially have to show that you're a student and that you're not failing. That's it. You don't really have to show your income potential or other things like that. It's not too hard to qualify for a student loan, and then you're gonna get more than enough money to cover your schooling, a fancy apartment, your $500 textbooks, and they try to cover your vacations and leave you with enough money to party 4 or 5 times a week, because we all know that that's a requirement and that everybody does it, right? Banks are in the business of lending money and getting a return on that money, which is why they want to lend you as much money as possible naturally, which is why they don't care if they loan you $200,000 to go and get a job that pays $40,000 a year. And so you'd think, okay, well, maybe my school will have my best interest in mind, but they don't really seem to care either. Otherwise, you wouldn't have students graduating with $1 million of student loan debt just to get a degree. And this is a true story, and I'll be talking more about this next week. If you don't sign up for the school's expensive classes, they don't get paid, which is why instead of teaching you about debt, schools invite banks to come to their orientations so banks can teach you about the magical powers of credit cards and student loans. And that's partially why the amount of outstanding student loan debt has gone up by about 150% over the last 10 years to break a record at $1.5 trillion. And the worst part is that student loan debt is one of the very few debts out there that cannot be forgiven. So even if you default on your debt, you still gotta pay it. You'd think that after such a big debt crisis, you'd want people to be more educated or at least be able to manage consumer debt better, but wait till you see what's second with credit card debt. If you applied for a credit card recently, you know how easy it is to get approved. I mean, banks love advertising instant approvals for credit cards. All you have to do is go to the bank's website and enter in your social security number and how much money you make, and boom, you just got approved for a $12,000 monthly line of credit at 25% a year. Woo! Oh my God, George, you won't believe what just happened. I just got approved for a brand new credit card. You know what that means? It's time to go shopping. And since no one's checking or verifying your income, why not just inflate your income on the application? Because who doesn't want a big credit limit? These banks thought they were so smart. I'm gonna get my money's worth. And honestly, this wouldn't be such a big deal if people just bought what they could afford. But not surprisingly, that's not what's happening, because we just broke another record for the total amount of credit card debt in history at over $1 trillion. And your credit card debt is one of the most expensive types of debt there is. And because banks are making so much money with their credit cards, they can afford to bribe you, entice you with huge perks and offers like $500 new card bonuses, or cash back for spending more on our card, or free vacations. Remember, banks are in the business of lending money and getting a return on it, which is why they want to lend as much money as possible, because that's how they get paid, right? So you gotta be aware of this. These perks and bonuses can be great if you buy things that you can afford. Like, I love buying things on my credit card because I get big cash back checks every single year for buying things that I would normally buy, but statistically, we see that the majority of people don't do that. What's the big deal though, right? It's your choice to be in debt, and banks are doing their thing, so if people want to be in debt, let them be in debt, right? Yeah, you're right. I agree with you. But what happens if people over leverage too much and then they don't have incomes to support their debt payments? What happens then? What you talking about, Jaspreet? Our economy's booming. Are you blind? There is a very common belief that when things are good and going up, it will continue to go up forever because, you get caught up in the excitement and the emotion. But what we've seen happen time and time again in history is that things are good, they start to grow, then they start to boom, then they start to hyper grow, and then things grow a little bit too fast and too big, so it has to be corrected. We saw it with Bitcoin in 2017, we saw it with real estate and the entire economic crash in 2008, we saw it with the dot-com bubble bursting in the early 2000s, and we saw it with the stock market recession in the early 1990s. When things are good and growing, we tend to believe that it's gonna stay good forever, and during this time, easy access to debt is great because it helps people buy the things that they want, even if they can't necessarily afford it, and it helps businesses grow and generate more profits because people are buying things. Now, you can never really predict these type of things, but if and when things start to turn, over leverage can turn a small problem into a much bigger problem, and then somebody will have to pay the price to fix the issue. So what should you do? Be aware, learn and understand how money works, because school doesn't teach this for some reason, and learn and understand how to use debt so you're not getting abused by it. And in case you do want to learn more, we have an ebook on money and investing that you can read for free when you sign up for a money and finance newsletter, and you can do that by clicking the link up here or by clicking the link in the caption below. So now that you've heard me talk about it, what do you think about this credit card debt and student loan debt? Is it a problem or is this normal? Let me know your thoughts in the comments below. If you enjoyed the video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every Wednesday and Friday at 7:30 a.m. Eastern Standard Time. So hit the subscribe button and the notification bell. That way you actually find out when our new videos are released. And as always, keep hustling.